Who became a millionaire the quickest in history? Warren Buffett took 55 years to become a billionaire, while Jay Walker accomplished the same feat in less than a year. During the dot-com bubble, he founded Priceline.com, which caused his net worth to soar from nothing to billions. But Buffett is still at the same top of the list and doesn't appear to be slowing down anytime soon. So that wasn't sustainable as his net worth also collapsed when the bubble burst. You want to accumulate that kind of money? Money is a difficult game to play. It's taught, brutally competitive, and you can't succeed if you don't know the rules. The issue with most individuals is that they may put in a lot of effort throughout their entire lives, yet they still end up in poverty because they lack the knowledge of how to allow their money to generate even more income. In other words, they lack investment knowledge. Assume you've been diligently saving and now have an extra $1,000 in your bank account. This is a success, considering that only about 70% of Americans even have $1,000 extra in their bank accounts. Let's imagine that you are going to invest that money instead of using it to buy another useless device or a pair of shoes that you will only wear once, before storing them in your wardrobe for many years before finally throwing them away. However, how do you invest your initial $1,000 is the question. Do you invest it in the stock market or in real estate? Which types of stocks do you purchase? Is $1,000 sufficient to begin investing? All of these and many more questions will be answered by us. Please click the like button to proceed with the discussion. Take a look at this example to get a better idea of what investing is and how it functions. Let's imagine you put in a lot of effort and saved $300,000. You could go to a Ferrari dealership and buy a luxurious car to show off your achievement, or you could buy real estate, a house, and rent it out. You will receive at least $2,000 per month. You can sell it and recoup your initial investment if you decide you no longer want to obtain the $2,000 income each month. In fact, your investment's worth might even increase, resulting in a price increase when you decide to sell it. And that is how business is conducted. But $1,000 cannot be used to purchase real estate. Even if it wouldn't even be enough for a down payment, you could still put that $1,000 into other investments and watch it grow. The simplest method is just to deposit it into a savings account and earn interest. But why would the bank reward you for doing so? Should they not be billing you instead? No. You see, the bank will take your money and lend it to someone else at a greater interest rate and will split the profit for you. Briefly, that is how banks operate. The main issue with this tactic is that it isn't profitable because to the extremely low interest rates on deposits, the most you might likely earn is 0.8%, which means that if you deposit that $1,000 into a savings account, you will get an additional $8 in 12 months. This is incredibly low because the Federal Reserve sets an inflation rate of 2 to 3%. If you do not achieve at least 2 or 3% over time, the real worth of your $1,000 will decrease, meaning you will be able to purchase fewer things each year. But why are deposit account interest rates so low? Since the epidemic pushed the Fed to lower interest rates, there are generally low interest rates this year, which is encouraging people to borrow money and spend it. Once we emerge from this crisis in a year or two, the Federal Reserve will raise interest rates to 1, 2, or possibly 3%, which will result in an increase in interest rates on savings accounts as well. Purchase of government bonds is your second choice. A government bond is a security that government issues to raise capital to fund expenditures. If the government decides it needs to build a school but lacks the funds to do so, it may issue an IOU, a document that states that the U.S. government owes the owner of the security the sum of the security's value plus interest. Although this example is obviously oversimplified, the main idea is nonetheless conveyed. decade. Since interest rates have been so low this year, government bonds rates are less than 1%, although they were as high as 3% 2 years ago when the interest rates were low. Considering that government bonds are the safest investments you can possibly make, this is not a terrible thing. Any investment that has a certain amount of risk, what are the possibilities that the US government would not repay the loan that you have made to it? The failure of the US economy as a whole may be required for the US government to become bankrupt. Because of this, US bonds are regarded as the world's safest investments. However, you should think about investing in the stock market if you want to earn a bigger return, like 10, 20, or 30%. For instance, just this year, the stock price of Amazon rose by more than 80%. The price of Google stock increased by close to 30%. The value of Tesla stock rose by 721%. You did hear that right. You did. 721%. Then why would anyone invest anywhere else when they could potentially triple or even double their money on the stock market? The answer is risk. For instance, there isn't much risk when it comes to government bonds. In actuality, it carries little danger. However, there is a chance that a specific firm could collapse or disclose poor financial results. And pretty much any unfavorable news can cause the stock price to fall. A product might be introduced by the company, and if consumers don't like it, it could result in some bad press, which could cause the price to drop. As a result, larger returns come with greater risk. Apple is a firmly established business with significantly lower failure risks than Tesla, but it also has less room for expansion than Tesla. As a result, Tesla grew by 721% this year, while Apple only increased by 70%. How much risk you can accept without going crazy is something you have to decide for yourself. An index fund would essentially invest in these top 500 US companies since the SP 500 is the most well-known one and tracks them. While some of these businesses will undoubtedly fail, others will prosper. Since the 1920s, the SP 500 has averaged 10% returns. These index funds give you a little stake in the top 500 US firms. VOO, Invesco QQQ, and Fidelity Zero Total Market Index Fund are my top 3 recommended index funds. They invest in the same firms and are fantastic. So how do you buy index fund shares? Where to begin? Find a broker who can sell stocks. Previously, you had to call someone to buy shares. Wall Street's Wolf, he called individuals all day to sell worthless stocks. Thankfully, 2020 is better and easier. Robinhood, Webull, and others offer smartphone apps for buying shares. Download one of these apps and sign up to invest right away. I made this video as simple as possible to help investors get started. Often, you want to start investing but have a million questions. So you start to Google things and become exhausted. Then give up and try again a few months later. I tried to address all of your questions in this short video. If this video was useful, give it a thumbs up. And if you're new, subscribe and press the bell. Thank you for watching.